What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 12th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time on today's Macro Monday to talk about why we are preparing for a big move here in the coming days. As we've not only got a lot of macro events coming up here from the CPI release as well as the Fed FOMC meeting, but we've also got lots of signs here in price that are signaling major signs of weakness and major volatility to come. We're going to be talking about all of it as we go throughout today's video. If you enjoy it, drop a like. It's one of the best ways to support the channel. And let's go ahead and kick off the rambling. So I want to start here with price action and more specifically talk about the crypto market. The first thing I want to highlight here is the term momentum. I know a lot of people are curious each and every time we have a correction in price as to whether or not it's a time to buy, or more specifically, if we've hit the bottom in the market. And I want to make it very clear that it's not about picking the bottom, but rather waiting for signs of a reversal, signs of momentum, where the bulls are showing more confidence than they were in the past. That can be your first early warning sign. But if we take a look at price action and the market order flow, we see that we are far from it. Let's take a look here at the past couple of months throughout 2022. I want to focus here on the more immediate response that comes after capitulation candles. Once we get those double-digit declines in price, followed by some other red days where it's just a complete cascade of downward moves for crypto. The question I have is, how is the market responding to those dips? Well, if we take a look over time, we can see that back in the past here in early 2022, we had some really big positive responses. People buying the dip, confidently showcasing signs that they're ready to take price higher. But each and every time, the immediate response is growing weaker and weaker. And the capitulation events are still remaining strong, dragging price lower to new lows each and every time. So we're not seeing momentum here in price. In fact, we're seeing the counter opposite. We're seeing that the bulls are not showing up to the party when things get bad. When there is blood in the streets, the smart money should be buying, and it's not buying right now. We are not seeing any type of obvious momentum here within price. So there's no real reason, in my opinion, to FOMO in at these prices. You can dollar cost average a bit, but again, I'm going to talk a little bit about why we're continuing to remain vigilant and not FOMOing in. If we take a look here at our partner tool, Bookmap, which you guys can check out at the link down below in the description, get a discount on them. It's one of my favorite tools outside of just analyzing price. Bookmap takes analysis on top of the order books for exchanges and the market order flow. This way we can have a heat map seeing how the order book changes over time. And most importantly, I want to focus in here on is the cumulative volume delta. Now, with their unique tool, Multibook, which is taking a look at across the major liquid exchanges for USDT BTC pairs, we can see that yet again, week after week after week, we are having negative market order flow. We're continuing to see an outflow, a demand of people looking to get back into dollar-based liquidity and potentially even get out of dollar stablecoins into traditional fiat or treasuries out of the crypto space. This is a net negative effect on crypto's price, and it's going to continue to weigh down price, because the only thing that's going to be able to support price going up long term is positive market order flow, more people buying and selling. And if we take a look at the data science models out there, one of those foundational sentiments that again give us an idea as to whether or not the crypto market is ready to really move higher, have we really had our capitulation event, they all signal, in my opinion, that we've still got much more down to go. Let's go ahead and take a look at Crypto Quant, our data science partner here on the channel. One really cool thing, guys, again, if you like any of the charts here, you can follow my dashboard for free on Crypto Quant. There's no paywall or anything like that. So if you guys want to get access to it, I definitely recommend it. But let's go ahead and dive into the four models we look at. Net unrealized profit or loss. While we are in blue territory, we can see that in the past, we've had much bigger capitulation events, much more directional declines on this indicator, the Newport model. And again, I would say, as we are entering into likely the first time that Bitcoin has ever been in a real bear market, a real recession in the economy, this is likely going to be the case, that we come down into capitulation territory that many aren't expecting. We've still got one or two major dominoes out there yet to fall. Is it going to be Genesis? Is it going to be the entirety of digital currency group? Is it going to be a major exchange that we least expect? There's a lot still rotting under the table. The capitulation, and more specifically the contagion, is still real. You take a look at the Korean Premium Index, still trading at a premium, meaning that the speculators have arrived. The short-term retail traders are buying the dip and could likely again be in a position where they need to capitulate. The supply and profit, the SMA 30, this is our custom data science model here, which is taking a look at the supply and profit. And again, as we've seen in just traditional crypto bear markets, we usually come down anywhere to a range of 44 to 47. Right now, while we are still pressing for the lows of this bear market, we're still at around 51 points on the index. I think most of us could probably agree that we are at least going to be hitting down into traditional bear market territory, especially considering the ramifications of what's going on in the world and within the crypto space. And last but not least, we've got the Puell multiple. There needs to be much more minor capitulation in the space. If you take a look at the hash rate, we are still riding up relatively close to all-time highs. We have never seen anything like this, such a divergence of overexposure in the mining space while crypto is so low. It doesn't make sense, and on top of that, it is not going to continue making sense for very long. Eventually, some of these miners, due to the low cost of Bitcoin, or the low selling cost or value of Bitcoin, are eventually going to force miners who cannot keep their energy prices and their mining costs to a low enough level. It is going to force some people out. Plain and simple. It's just how the mining market works here, folks. Now, that's within the crypto space. So the data science models, the market order flow, and the price action aren't really helping us out here. But what we've got to do is step out to the big picture. We got to look at the macro sentiment. That's what we do here on the Macro Mondays. And I think one of the biggest things that is showcasing a sign that we have lower to go and is a typical bear market reaction during these periods of relief that we've seen in equities is that simply when we see weaker responses in the previous market leaders, we still have a ways to go. And it's not just Bitcoin, which has again been the best performing asset in the past decade when you're comparing it to the broader stock indices. But we can take a look and see that the NASDAQ is getting weighed down by that 200 week. It is not coming up to test its 200 day like it was doing before. This is one of the biggest warning signs here, folks, that we've got a lot more room to go down. When the traditional buy the dip indicators, the 200 week moving average, is starting to act as resistance, that means we're entering into uncharted territory. It means that we are in a much longer term, likely 2-year bear market where we're going to be moving down to much lower levels. You can start to see it here materializing in price. Just take a look at the last decade where the 200 week was a buy the dip opportunity every single time. Now it's starting to act as clear resistance. And when we take a look at the other indices, the S&P 500 and the Dow Jones, which have generally been leading here during these relief rallies, as they are more defensive, they pay dividends, they will likely survive any recession in the market. We can see that they're even starting to fade here, and yet again face another deviation, likely moving lower. And once we break through that 200 day on the Dow Jones, I think we are going to see pandemonium, because the market's going to realize that capital, dollars are no longer flowing to any kind of equities, whether it be the risk on or the risk off. The ones that don't pay dividends are the ones that do. It doesn't matter. People are going back to dollars. There is going to be at a minimum, one more major wave of capitulation here before we really start to find our bottom in the market. And it could take a lot longer if the Fed starts to deviate or pivot. Now, one thing we wrote about within the Dash report here has been playing out really well so far is a deviation below the 200-day moving average. This is the dollar index, which is tracking the dollar's performance against a broad basket of major currencies, such as the Japanese yen, the Great British pound, and a lot of other currencies across the world, such as the euro. Now, the big thing here is that a lot of people love to short something once it breaks that 200-day. But the key thing here, I would say for this, especially considering that it's been a leading indicator, is that right now, if we get a pop above that 200-day, that's my signal to go long. And it's the same reason if we go back here to the Dow Jones, right, when we get above that 200-day, right, something that again is kind of that point where people start to say, oh my God, the market is finally bottomed, it's going to go up, it's time to go long. You are basically going to end up being the exit liquidity for smart money who bought much lower and is now selling their short-term trade. It's just how the game works, because they know at that moment when you break above those moving averages, when you break above those lines of previous resistance, right, as we see here, right, that big 2% candle, one of the biggest days towards the close of this relief rally, ended being the top of this short-term relief rally, or at least it looks like it's going to be. Another big thing here, US 30-year yield, which has been on a decline since October here, signaling that the market is pricing in less Fed rate hikes than before. One important thing to note is that the fight may not be over here. With the recent PPI report here, right, the producer price index running at higher than expected, we can see that the treasuries had a severe reaction, the biggest upward move here since back in August of 2022. You guys remember what happened back in August? It's when the Federal Reserve pivoted, and it pivoted hard. It made clear to the market, which was thinking that it was going to potentially turn back on its monetary policy. It stuck to its guns. Actually, I want to make sure I clear up my quote there. They didn't pivot, whereas the market thought they were going to pivot. They stayed on course, and they made it very clear that any expectations that the fight against inflation was over, for those people to think again and to realize that inflation is a long symptom of excess monetary policy that they are going to have to tackle. Now, I'm not saying one day alone is enough here, but again, if you just take a look across these indices, right? We take a look at the VIX this morning, which has popped up. The market even hasn't opened here, and the VIX is already popping up 2 points after a major deviation here from this low range here on December. And we've climbed up from around 19 points to 24, well above that 200 week, and every single time we did this, folks, we went up to that high range on the VIX, which means as volatility goes inverse to stock prices, stocks are likely going down. And crypto is likely going down as well. Until the trend severely changes, why fight the trend? That's the big point I want to drive here. I'm not a negative person, guys. I don't mean to be bashing anyone out there. I know all of us want crypto to come back to the kind of performance it was having before. But I'm going to be blunt and real with you guys here. We are going through a first in crypto history, a real recessionary bear market for Bitcoin. And whereas we usually already see 80% plus corrections, which we haven't even gotten to yet in normal crypto bear markets, I don't even want to think about how bad it's going to get by the end of this bear market for crypto as we go through a global recession. Now, this week, we've got two major events. On December 12th, here today at 8:30 a.m. Eastern Standard Time, we are going to get that CPI report. And I want to go ahead and use the PPI, the Producer Price Index, as a good example. That was a negative upset. A lot of people expected a reading of, I think, around 0.3%, and instead we got 0.4. Don't quote me on that. Essentially, we had a higher number than people expected. And that's the main point I want to focus on. People are getting too eager, too optimistic that the Fed is easily going to pivot. And folks, I got to tell you, I don't think we're there just yet. I don't think the Fed has the room to pivot just yet. And that will be showcased once we get these readings coming out later today. I think it's going to tell us all we need to know about whether or not the Fed is going to raise by 50 basis points like most people are expecting, or surprise and go up 75 basis points and tighten even more aggressively. That's the key thing we got to focus on here, folks. I know it gets a bit tiring talking about the Fed, right? I get a bit tired of talking about it too, but it is the dynamic that is going to determine whether or not it's time to go long or time to go short. And right now, we are still betting that the market is going down. We are in cash right now for the vast majority of our position. And we have been so since back in August when we took advantage of the relief rally that we've been talking about constantly here on the channel. So, now, outside of that as well, while we are pessimistic at the moment here, while we are betting on the market still going down from all of our different models and inputs, I do want to let you guys know that it's not a time to just completely sit on the sidelines. It's a time to be doing due diligence, looking at projects out there. We've talked about a lot of them here on the channel, projects that are really exciting to us. One of the other ones as well that is definitely interesting and the much more kind of high-risk plays in the market is within the metaverse. And that's one of our sponsors today, which is Virtua. Now, if you guys haven't heard about Virtua, Virtua is a major decentralized metaverse project. It's one of the few that's really gained traction. There was a lot of different types of metaverse projects back over the past previous months or the past year or so during the previous bull market. But this one has continued to be building here during this period of time and has really, I think, one of the few projects with kind of momentum that can actually materialize long term. Now, I've been taking a dive through the project, but one of the big things that they've been focusing on is setting up slowly but steadily the metaverse, and the big area they have here within the virtual island that they have within the real estate market here. The virtual real estate market is the monster zone. I recommend you guys take a look at some of the offerings there that they have. But the big thing overall that I really like is that for someone who's played with VR for a long period of time, I used to have, I think, one of the early Oculus devices. I've played on, I think as well, the Rift, one of the big VR headsets back in the day. What I think is really interesting when I played VR chat in some of these kind of open, kind of metaverse-like realms is that I don't want them to be owned by a big centralized company like Meta or Facebook. I think that it's going to be through a decentralized framework. I think it's going to be one that's owned by the community and is going to be decentralized from the get-go. And as I take a look through some of the documentation, some of the video footage as well, it seems like this is going to be a very interesting universe, one in which can be much more exciting than that of what I've played through anything that Meta's built or some of the big VR companies that Oculus and others have been building. So I definitely recommend you guys take a look through Virtua. Let me know what you think. Feel free to leave a comment down below on the project. But again, really excited to see some of these projects continuing to build during the bear market. And you guys can read through the wiki if you want to find out any information. Definitely do your own research on it. And one last comment as well that I wanted to share with you guys is that for those of you who heard about BetDex the other day, I just wanted to share there was a bit of bugs when we were doing the sponsor at the time and stuff as we were on the test net when we were demonstrating it. So if you guys want to go ahead and check out BetDex now, they are live here. They're trading during the World Cup here. There's Argentina and Croatia going on tomorrow on December 13th. So it's going to be a really interesting game as we're getting towards the close here. I think the 18th is when the final game is going to play. So if you guys are interested, check out BetDex at the link down below in the description. But I'd love to hear what you guys think about what we talked about today. What do you think the inflation report is going to be? What do you think the Fed is going to do? And on top of that, what are you telling from price right now? Like, what are you getting from what price is telling us at the moment? I think, to be honest, market is showcasing clear signs of weakness, and we got to be prepared for the worst. But that's enough rambling from me today, guys. Thank you all so much for watching. I hope you're having a fantastic day wherever you are. But until the next video, I'll see you all in the next one. Take care, everyone.